All right, what's going on, everybody? Happy Thursday, August 21st, 2025. My name is Hamilton. Our co host Josh is currently on vacation up in the Arctic Circle or something, so it's just going to be me today. We're going to be going through a bigger picture view of the crypto market. Josh is really in the trenches looking at some of the trades that we want to take. I tend to take a step back and look at the bigger picture. Are we still trending higher? Should we still be net buyers, etc.? That's what we're going to focus on today. I think it's particularly interesting given the fact that it's the middle of August. We know that the middle of August, or August in particular, tends to be slower, more volatile, choppy price action. We're seeing that not only in the TradFi market, we're also seeing that in the crypto space. This, month or 2 month period of trading tends to really frustrate traders. Day traders tend to get frustrated because markets are super choppy, and even intraday price trends are not as fluid as they are outside of the August and September corridor. Swing trading in particular tends to take a back seat because we don't want to be placing as many bets here when the market is chopping around. We want to wait for the resumption of the uptrend. As always, we're looking for relative strength, and there's pockets in the TradFi market. And there was a lot of good stuff to think about yesterday when the crypto market was outperforming the TradFi market, right? The Qs, the S&P, the Dow closing down, but crypto was actually green on the day. So there was some relative strength in the crypto market. And, if you're of the opinion that the crypto market tends to front run kind of the TradFi market, which I do think that there is a certain amount of truth to that, given the risk, kind of where they're at on the risk scale, they're further out. So they're more, the crypto space is more touchy to liquidity and risk sentiment. It's nice to see the crypto space catch a bid yesterday as a whole. We also saw the higher beta stuff outperforming Bitcoin. So we saw Solana and Ethereum both outperforming Bitcoin. It wasn't just a move into Bitcoin as a defensive position in the crypto space. It was still risk permeating out through the market caps and then heading down. We also saw some interesting altcoin setups as well. So taking all this into account, understanding kind of where we're at, it's the doldrums of August. Everybody kind of has one foot out the door already. Your kids are about to go back to school, so you're sneaking in one last vacation. You're on the beach before fall comes in. Any sort of volatility or negative headline tends to just scare investors and traders. We see it every single year. We have the same conversation every year inside of TTI. Summer tends to be a tougher trade than Q1 or particularly Q4. But if you do the legwork now, if you stay on top of this stuff, there are clues. The best trades that we put on throughout the year typically come out of this summer seasonality weakness. Why? Because the areas of the market that outperform during this seasonally weak period tend to outperform over the next, 4 or 5 months coming into the October, November, December, January corridor. We have the data to support that, okay? So without further ado, let's get into it. Is the uptrend still intact in Bitcoin? Yeah, absolutely it is. Once again, I understand how frustrating it can be, particularly if you have a shorter term kind of a time frame here to be trading this stuff. But if you have a long-term time frame, like most of us do that are listening to this inside of TTI, anywhere between 6 to, in some cases, 24 months out, we don't think this is necessarily the worst type of price action for August. As a matter of fact, I'm looking at this as a correction through time instead of price, which is almost always preferable, meaning price is going sideways rather than down. I prefer those types of environments. You lose less money on open positions, and it tends to be an easier buy on the way back up. Bitcoin in particular hitting an all-time high just a couple of sessions ago and then falling back within the range. Is this necessarily anything to worry about? In my mind, no. As long as we're trending above an upward sloping 200-day moving average and we're above the 100K level, I think this is just noise. Price target remains 155 to 160 up here at the 2.618 fib extension. Again, we're trading above an upward sloping 200-day moving average. We're trading within a bullish momentum regime. If you're inside of TTI, the 3 non-negotiables are there: relative strength, momentum, and trend. It's just sit and wait. Again, I understand it can be frustrating, but it's August. Go touch some grass, you're going to be fine. IBIT is a great example of this, right? We're trading options on IBIT as well as owning spot Bitcoin. Now, I really like these options plays, particularly for crypto, because of the volatile nature of crypto. For 2 reasons. One, if you can buy lower implied volatility options contracts, you can really juice the returns on any move higher, right? The odds of implied volatility expanding after you own these, if you buy them at the appropriate IV levels, really add an extra dimension to the profitability on this trade, which is what we try to do. From another standpoint, though, is we can really cap the amount of risk we have on a trade. For those of you that have been trading crypto for upwards of a decade, like myself, liquidity, at least 10 years ago, was a big problem. Even nowadays, it's a problem on certain types of trades, but liquidity can be an issue, meaning you can have a stop loss on the books. Your stop loss gets hit at 3 a.m. China's trading, markets are down, and your stop loss gets blown through, and next thing you know, you wake up and you've taken a way bigger loss than what you initially anticipated because of a liquidity pocket or whatever. Options don't allow that. The risk premium that you pay is the most that you'll lose if the trade doesn't work, and so I really, really, really like the fact that you can clearly define your max risk at entry. I'm not worried about gapping down at 3 a.m., 4 a.m., having to wake up to emails from BitMEX of liquidation prices over, and I don't want to deal with that shit ever again. I'm too old. I have kids now. Not worth it to me. I love trading options on this, again, for the implied volatility and the fact that we can cap our risk when we originally open it. As long as we're trading above this fractal here at 64.25, I think this is just sideways consolidation. And as long as we're trading above an upward sloping 200-day moving average, even if we do breach below 64, I'm still long. I still like this. We're still trading within a bullish momentum regime. As a matter of fact, IBIT looks better than Bitcoin itself. I think this is a fantastic trading vehicle to grab Bitcoin exposure. And to take it one step further, when you think about building a portfolio, there's a lot of attractive setups in the crypto market, particularly from a risk to reward standpoint. But Bitcoin should arguably be one of those positions that you have on no matter what. We talk a lot about inside of TTI risk to reward and high beta versus low volatility and whether or not it's worth holding lower volatility in a portfolio in a bull market, etc., because you end up paying a lot of opportunity costs. Bitcoin is inherently different because so much of the crypto ecosystem revolves around Bitcoin itself. So I do think that even if Ethereum is going to outperform over the next year or two, even if Solana might outperform or Ripple or any of these, I think that there should be in any portfolio a piece of the Bitcoin puzzle. And for us, once again, that's options trades in IBIT and then spot trades in Bitcoin. So still like Bitcoin. I think we're trending sideways through a seasonally weak period, expecting a positive resolution. IBIT next price target up 78. And then once again, price target up in Bitcoin 155 to 160. Let's move on to Ethereum. We've been bullish Ethereum 4 months now. Right? We bought the original entry back on May 8th and we've held it. We've sized in, we've taken profits, we've done lots of cool stuff here with Ethereum. We came up and tapped 3.5-year highs just a couple of sessions ago, and now we're pulling back slightly with the rest of the market. Again, it can feel like the world is ending. It can feel like the walls are closing in on you if you don't know what you're doing when you're trading these higher volatility setups. We do, right? It's all about managing risk to the upside, meaning if you throw something on and you hit some sort of predetermined profit target, for us, that's 100%. We take half out of the trade. That removes all risk from it. Now we're just playing with house money. So we can hold comfortably through these pullbacks. Open P&L takes a hit, but the back-end account capital does not. And that's the whole point. Protect your account capital first, then go after the big returns. We're not trading small accounts inside of TTI. That's not what we're targeting, right? So we're not looking to only lose $500. These are serious positions. We want to cover our risk as soon as we can. That's what we try to teach, and that's what we've been able to do with Ethereum. Every single official trade we put on in Ethereum is free right now, meaning we've already taken out half at 100%, and we have exposure in Ethereum going out for years, all the way out to January of 2027. We also have Septembers of this year, Decembers of this year, Januaries of next year. I mean, we're really loaded into Ethereum, and it all comes down to not only this beautiful technical setup, which we're once again trading above an upward sloping 200-day moving average, very nice bullish momentum regime, but the relative strength in Ethereum is off the charts. If we go and we actually look at the Ethereum against Bitcoin chart itself, look at this beautiful, beautiful move here. If I can get the damn chart up. What is going on? What is going on? Here we go. Let's just do it manually. And we're going to take out all of the indicators because those just muddy it up and it doesn't really make a whole lot of sense for what we're doing here. But the Ethereum versus Bitcoin chart to me is absolutely amazing. This is the most important chart, I think, in crypto. This is what really allowed us to get long May 8th. I'm going to continue to point this out. The May 8th technical setup in Ethereum was wishy-washy at best for us. It's not generally something that we like to do. We don't like to buy these bounces off the bottoms very much. We're normally buy strength at breakout, not necessarily buy the bottom bounce, but we had conviction, and it all started with this ratio chart of Ethereum against Bitcoin. The same area 5 or 6 years ago that we found a floor. We were finding a floor again at the beginning of May, late April, and we said, listen, made sense last time. Why don't we take this opportunity this time to take a trade if we break above a key level? And that May 8th gave us that 2K entry, and then we got long, and the rest is history. We expect Ethereum to continue to outperform Bitcoin for, anywhere between 12 to 24 months. Last time it took 2 years, right? Ethereum outperformed. We'll just go ahead and stick a flag in the ground. End of December through the end of November of 2021. That's a 2-year run, more or less. We tend to think it's going to happen again. I don't necessarily care about the headlines. Tom Lee's out there shilling Ethereum, making absolutely outlandish claims that Ethereum's going to go to like $100,000 and whatever. You know what? For my sake and the sake of TTI traders, I hope he's right. But none of that has anything to do with the trade itself. It comes down to technicals, ratio charts. Where is the better setup? Last time this particular relationship presented itself, Ethereum ran 400% against Bitcoin, which simply means your money went farther owning Ethereum than it did Bitcoin, which is ironic because Bitcoin went from like 6,000 to 65,000. And Bitcoin got all of the headlines, which is great. Particularly if you own one Bitcoin, your $6,000 buy is now worth 65 grand. That's incredible. I'm not trying to shit on that whatsoever. But if you owned Ethereum went from like $150 to 4,500 or something like that. It was just outperforming Bitcoin left and right. So as a trader looking for greater returns, what was the better trade, Ethereum or Bitcoin? It was Ethereum. Now, last time this happened, it was hard to tell in retrospect that it was going to happen. This time we were prepared. We were prepared and we took the trade, and we expect this to continue to work itself out. I do want to point out that this ratio does not just go parabolic. It was a 2-year run where Ethereum outperformed Bitcoin by 400+%, but it did not last every single day, every single week, every single month. As a matter of fact, you saw that there were frequent drawdowns. Ethereum underperforming Bitcoin for upwards of 100 days in certain aspects. So again, we have the trade on in Ethereum, but we're realistic about the expectations. We expect over the longer term, Ethereum is going to outperform Bitcoin, but we don't expect it to outperform Bitcoin the entire run. I think that's super important. Talk about this inside of TTI all the time. Expectations are very, very important. If your head's in the right spot, you have the right expectations, you can make a lot of money in pretty much any market. But a lot of traders, they live in la-la land, fantasy land. They think everything's going to go parabolic 24/7. Simply not true. So Ethereum next price target up is all-time highs at 5,100, and beyond that, 62 to 6,300. I think Tom Lee said this year he thinks this thing could get to 10K. By all means, Tom Lee, please, with your billions of dollars under management, pump this, please, to 10,000. I would absolutely love it. We'll make a bunch of money. But let's, once again, tether these expectations to reality and follow the fib levels up. 5,100 and 6,300, I think, are the next logical places for Ethereum to find resistance, right? Those are the price targets. Next one I want to talk about is Solana really quick. So Solana has been a tougher trade, and I'm long Solana. Inside of TTI, we put out some Solana trades. We said, listen, from a risk to reward standpoint, what's the better trade right now than between a Bitcoin, Ethereum, and Solana? And we're really targeting those three right now because those three have ETFs that are listed in the TradFi space. We can trade options on those. If you're trading on Coinbase or other areas of the crypto environment, other exchanges that offer other types of trades, that's great. There's a lot of relative strength out there, and there's a lot of assets that are outperforming these three, Bitcoin, Ethereum, and Solana, and I encourage you to trade those if you have the capability, if you know what you're doing. But for those of us that are looking to incorporate the TradFi market into crypto, options availability through Solana, through SOLZ, and then also Invesco just got word that I think they're going to be approved. So there's going to be more ETFs featuring Solana. I think Ripple has one in the pipeline as well. If we take that into consideration, and we know where Ethereum's at right now, the Ethereum trade right now, still love it, want to remain in it, but as of right now, the entry, is it better than Solana from a risk to reward standpoint? And I don't think it is. Again, beginner traders or investors that can't wrap their head around risk to reward will take that phrase and say, Hamilton is saying Solana is better than Ethereum. And it's just not true. I think Ethereum is going to be the better trade overall. But right here, where entries serve us versus the profit targets we're targeting, Solana is the higher R to R trade. So what we did, particularly when those August contracts last week expired in Ethereum, we rolled some of the profit, which we had a lot. The Ethereum contracts were up over 1,000% at close. We rolled some of that into the Solana trade. I want to point something out. This base underneath all-time high, while frustrating, is totally normal. We trade this type of stuff all of the time. Give me 1 second to show you Binance. Now, we don't have a trade on Binance per se because, at least in the TradFi market, we do have one on the crypto space. But consolidating underneath all-time highs, while frustrating, typically leads to all-time high breakouts. That's how this stuff works. TA 101, folks. You build a base under an all-time high pivot. We generally pivot higher. Most people would sit here and scream, this is distribution, it's going to break down. You have to think about the confines of the macro picture. Are we in an uptrend or a downtrend? We're in an uptrend. We already talked through that with Bitcoin and, which we'll talk about in a second, total crypto market cap. Binance kind of showcasing this here with the all-time high breakout. Going back to Solana, we expect the same thing. We expect the same positive breakout here in Solana. Price targets 415 and 667, kind of the next leg up here. Let's take this into consideration here. I really like adding it as Solana above 206. As a matter of fact, that's where a majority of my entries are, so I'm currently down on the trade, but I'm totally fine because I bought time, and I know where I want to be in the bigger picture. If Solana starts breaking down below kind of this fractal here in June, maybe I'm wrong, but we're not anywhere near that, so I'm going to continue to sit in these trades. If you think about this from a risk-to-reward standpoint, and you look at from the 206 up to 260, which is the next PT, where is the profit target? I don't remember where it is. Man, it's been a while since I've used it. Where is it? Where is the profit? I cannot believe I can't find it. All right, well, we'll do it another way. 206 to 260 represents a 25% move, which is fine. It's kind of the first all-time high breakout. The contracts that we own will probably up and over 100% by the 260, which means it's a great time to take profit, take half off, and now we have a free tranche or a couple of tranches of Solana completely free up into all-time highs. It's absolutely fantastic. And I'll tell you guys ahead of time, we break above 260, we're probably going to be adding another tranche because that will have confirmed the thesis that this base underneath all-time highs is probably going to break out and continue higher. So we'll probably be adding on above 260, but the base case here is 206 to 260. And then if you continue to extend that out 415, we're looking for a 100% move just at the first price target. So again, Ethereum is trading right now at 42, and our next PT up is 51. I shouldn't have to show you this, but if you do the math, that's not anywhere near a 100% move. As a matter of fact, the next PT up at 62 is not even a 50% move. So while I do believe Ethereum is on a warpath higher, again, I don't believe that it has the same R to R as of right now as something like a Solana. I think Solana is a better opportunity here from a risk to reward. Now, it's a little bit more difficult of a trade, right? We're still building the space underneath all-time high. It can be frustrating, but I do believe that as the total crypto market cap, which is the next chart I want to talk about and kind of end on, goes up, the liquidity that is entering the crypto space will continue to permeate through. Solana being one of the larger market caps, not the largest, but one of the larger at 100 plus billion, is going to be a direct recipient of a lot of that liquidity, especially as the ETFs get approved and TradFi moves into the space. I don't care about the fundamentals. I don't care about the use case of it. I don't care. I do like the fact that Tom Lee's pumping Ethereum. I think that's great because we already own it, but I don't particularly care what Tom Lee thinks. I don't give a shit that he thinks that Wall Street's going to use Ethereum as an on-ramp. I don't care. I'm a trader. I'm here to make dollars because until I can pay my bills with Ethereum, Ethereum is strictly a trading vehicle to make dollars. Solana is the same thing, right? So Solana above 206 price targets, intermediate 260, beyond that 415, 667. No idea how long it takes there, but I have January of 2026 exposure, so I can sit here for the next 6 months. As long as we're trading below these lower June highs, I'm totally fine with sitting here and waiting. I like the trade. There's no reason to micromanage it. We'll see if it works. Last one I want to talk through really quick is the total crypto market cap, because this is really important. So inside of TTI, we use a top-down process, not a bottom-up, meaning we don't look at an individual setup and make a distinction for the whole market. For example, you'll see people that like only trade Tesla, and they're like, oh, the market sucks because Tesla's down. Folks, there's a lot more stocks. There's like 10,000 different trading vehicles in the TradFi market. Just because Tesla's down doesn't mean the other 9,999 are down as well. They could be up, right? Same thing in the crypto market, right? Just because one asset's down does not mean the entire crypto market is down. And I think it's super important because we bring in the idea of liquidity. Liquidity is essential. If the stock market or the crypto market, in this case, is the car, liquidity is the gas in the car. You need liquidity entering the market for the car to go. As liquidity gets sucked out of these areas of the market, you tend to see price depreciation. As liquidity is entered into the market, you tend to see price appreciation. And we know right now, even with the Fed easing rate cuts, they haven't cut rates in 7 or 8 months or something like that. We're coming into a September decision here. I think the market right now is pricing in about an 80% rate cut chance, which is down from like a 95 a couple of weeks ago. Liquidity is still entering the market. There's a rate cut cycle going on, regardless of whether or not it's paused. Reserve ratios are coming down. Liquidity across the entire globe is accommodative. Central banks are cutting. We're in a rate cutting cycle around the world, right? For most central banks. The total crypto market cap is a direct reflection of that liquidity that's entering the market, right? As long as we're in a solid uptrend, which I'm going to throw the 200-day moving average back on, we should be net buyers of the crypto space. Our line in the sand for this used to be $3 trillion. I don't think we ever come back and retest $3 trillion until potentially the next bear market, which we're not in. We're not close. I'm not even going to entertain the thought of a bear market. There's no signs anywhere that a bear market is coming. I see a solid uptrend that's frustrating people that can't think beyond 15 minutes, and that's your fault. That's their fault. That's not my fault. I could think 6 months, 12 months out. If you can't stand being in a position for 6 minutes without making money, either figure out a trading style that works for you or get the fuck out of the market, right? It's just that simple. For me, we're in a solid uptrend, bullish momentum regime on showcasing here. We have a upward sloping 200-day moving average, and we were just at all-time highs, folks. Again, frustrating that we pulled back, but just a couple of sessions ago, we were at all-time highs. I think we see 4.4 trillion, which, by the way, we saw a 4 trillion tap, right? We saw 4.17 trillion a couple of sessions ago. So that level, that super important psychological level, has been cracked. I think the next time we test it, we fly. Next PT up 4.41. Just following the fibs, folks. It's not rocket science. And then our co-host Josh should be screaming, we're going a lot higher. He thinks 6, 7, 8 trillion, mostly because of the on board with the stable coin kind of revolution going on through the Genius Act and everything. And listen, I'm not going to sit here and tell you I know everything about that stuff, but I can read a chart and I can read an uptrend. And I know that the total crypto market cap going up tends to be very bullish for risk assets within the environment. And the environment that I am focused on, or the assets I am focused on inside of the environment right now are Bitcoin, Ethereum, Solana. I love the Ripple chart. And then there's some dirty small caps that I like too, but I'm going to save that for when Josh gets back because that's his specialty right now. So, guys, all I got to say is we're in a bull market. I know that August tends to be choppy. I know that the end of summer, right, coming into September tends to be worrisome. We have a slew of earnings. We have a Fed interest rate decision coming into September. We have Jackson Hole tomorrow with Jay Powell speaking. There's a lot of catalysts. But I'm going to tell you, if you look back through the last 70 years of data, it tends to be this way every single time. And it opens up into the best 3 to 4 month run the market has. The end of October through November, December, and January, you want to be long in a bull market. I'm telling you, you can reference this August 21st, Thursday, 2025. Come back in 4 months and tell me I'm wrong. And I'll buy you a Starbucks coffee or something. I'm probably not going to be wrong, though. Okay, so follow the relative strength, folks. Keep your heads on a swivel and enjoy the rest of your summer. We'll be back next Thursday for the crypto report. Josh will be back, and we'll be diving back into shitcoins. If you have any questions regarding any of the material that we went over tonight and you're inside of TTI, please leave them as a comment below. I will post this over on the market research portal right now. And if you're not part of TTI and you want to take all the trades with us, we've had an incredible last couple of months. Feel free to reach out via the newsletter.thetradinginitiative.com, and I'll send you all the information there. Enjoy the rest of your Thursday, folks, and I'll catch you in the next crypto report.